Welcome back to Smart Stock Sam, the channel where we cut through the noise, dig into the data, and give you the unvarnished truth about the stocks. And today, we are returning to a ticker that I have been tracking obsessively for weeks. A stock that has been swinging wildly, generating massive controversy, and most importantly, a stock where our previous forecast played out almost perfectly. I am talking about Datavault AI, ticker symbol DVLT. Today's video is called Datavault AI, Patent Approvals versus Legal Probes, my final verdict, and I need you to stay locked in until the very last second, because we are going to cover patent breakthroughs, criminal-level legal risks, hidden institutional warfare, and a short squeeze setup so explosive that missing it could mean leaving life-changing money on the table. This is not a drill. Let's get into it. Now, before we dive into where this stock is heading next, let me take a moment to recognize what happened last time. Because here at Smart Stock Sam, accountability is everything. When I analyzed Datavault AI back on June 13th, I went on record and called it. I told you the sellers were exhausted. I told you the indicators were flashing a mean reversion bounce. I identified the 35-cent level as the absolute line in the sand, the floor that had to hold. Because a day prior, on Friday the 12th, the stock fell to an intraday low of exactly 35 cents. It kissed that level and bounced. It closed at 36 cents. But then something happened that nobody could have predicted. On Monday, June 15th, Datavault AI announced it had received a USPTO notice of allowance for a massive asset tokenization patent. That news was the spark in a powder keg. The stock opened Monday at 39 cents and rocketed to 42 cents. But now the real question is, what happens next? And do you know what is even more dangerous than a wrong prediction? A correct one that makes you overconfident heading into the next trade. So let us reset and build this from scratch. Starting with my overall verdict right up front, because here at Smart Stock Sam, we do not bury the lead. Datavault AI is a speculative buy. Not a reckless buy, not a confident conviction play, a speculative buy, meaning this is strictly for capital you have already mentally prepared to lose completely. The bullish catalysts are real, and they are exciting. We are looking at aggressive fundamental ecosystem expansion, highly anticipated global exchange listings on the immediate horizon, and newly approved asset tokenization patents giving the company a legitimate technological moat. That sounds like the foundation of a serious Web 3.0 powerhouse, but the headwinds are equally savage. Active legal investigations into potential securities fraud, relentless insider selling pressure, and a macro-technical chart structure that is still deeply broken for long-term fund managers. This is the textbook binary setup. This company is either going to zero or it is going to the moon. There is almost no middle ground here. And that is precisely what makes it so dangerous and so compelling at the same time. So let us break down what the charts are actually telling us right now, because the macro picture and the micro picture are singing completely different songs. On the macro level, the institutional algorithms are still flashing a strong sell signal. Why? Because the stock is still trading below its 100-day moving average of 43 cents and well below its 200-day moving average of 46.5 cents. For any conservative pension fund or mutual fund manager, this chart is still broken. They will not touch it until price reclaims those levels. But zoom into the micro level and the story changes completely. The 5-day moving average is currently sitting at 40 cents, and along with the 10 and 20-day moving averages, it is curling upward. That is a confirmed short-term trend reversal signal. And here is the most important piece of information on the entire chart. The volume. Buyers stepped in and actively defended the 39 to 40 cent range with nearly 20 million shares traded on June 17th alone, pushing the stock up 8% on a single day. When buyers show up that aggressively at a specific price level, the market is sending you a very clear message. Now, let us check the momentum engine to see if this move has real fuel or if it is running on fumes. The 14-day Relative Strength Index, the RSIE, has cooled off to 53.68. I want you to understand why that number is actually beautiful for a potential trade setup. It means the stock is not oversold and panicking like it was last week. but it also means it is nowhere near overbought territory. There is a clean runway ahead. The MACD, which measures the momentum of the underlying trend, has crossed into positive territory, registering 0.003. Small number, massive signal. The bears have officially lost control of short-term momentum. And the Williams %R has recovered all the way from a horrific -92 last week to -42.18 today, generating yet another independent buy signal. 3 separate oscillators, 3 confirming signals. The technical engine is primed. Now, where does Wall Street think this stock actually goes? Maxim Group has placed a firm buy rating on Datavault AI with a price target of $3 per share. From 40 cents, that implies an upside of between 600 and 740%, depending on your exact entry. Is that target realistic? That depends entirely on a series of upcoming catalysts. We already saw the USPTO Notice of Allowance on June 15th for their core minting and authentication technology. On June 18th, the company's CEO spoke at the CyberAcuView 5th Anniversary Conference, aggressively positioning their tech to capture a slice of the $240 billion global cyber insurance market. But the catalyst that every short-term trader needs, circled on their calendar, is June 23rd. That is the day Datavault AI officially launches its Dream Bowl 1 meme coin on the Biconomy Global Exchange. That listing alone could expose this company's ecosystem to millions of new international retail users overnight, and new buyers plus trapped short sellers plus thin float is a combination that has historically produced some of the most violent price spikes in penny stock history. Could we see a move that no one is expecting? The math says it is possible. But let us ground all of this excitement in the actual financial fundamentals, because the growth numbers here are genuinely extraordinary and also come with one critical catch. Revenue is up 443% year over year as of Q1 2026. The company holds an $800 million tokenization contract backlog, representing enormous future cash flow potential if they can actually execute. They signed a binding letter of intent for a 140 million Canadian dollar acquisition of CyberCatch Holdings, which would meaningfully expand their cybersecurity footprint. And at the center of everything is a proposed $2 billion structured financing arrangement that they have a non-binding term sheet in place to secure. On paper, that capital would eliminate any cash flow concerns for the foreseeable future and validate every element of the bullish thesis. But the catch? To get that money, they have to hand over majority board control, and the deal demands non-refundable fees of $25 million per financing tranche. It is essentially a deal with the devil. It provides the capital the bulls need to justify the $3 target, but at the cost of severe corporate dilution and the total surrender of executive control by the founding team. The question no one on Wall Street can answer right now: does the money actually close? Because if it does not, everything else falls apart. And speaking of things that keep me up at night, let us talk about the institutional split, because sophisticated money is literally at war over this stock. On the bullish side, the Vanguard Group increased their position by an astonishing 912%, adding nearly 10.8 million shares. Goldman Sachs went even further, expanding their stake by over 3,175%. These are not speculative retail investors. These are the largest asset managers on the planet, and they are loading up. But then look at the other side. State Street Corporation removed 85% of its existing position. Jane Street Group, one of the most sophisticated quantitative trading firms in the world, liquidated 100% of their Datavault AI holdings. Gone. They erased the ticker from their books entirely. When that level of disagreement exists among some of the most intelligent financial minds on Earth, it is your single biggest signal that this is not a normal trade. It is a coin flip with extraordinary potential upside and extraordinary downside. And then we arrive at the darkest chapter of this story: the insiders. Over the last 6 months, company insiders have made exactly 0 open market purchases of Datavault AI shares. 0. Not one executive, not one board member, but they have executed 20 open market sales. Silex Holding Company offloaded approximately 30.6 million shares, extracting more than $31 million in liquidity. Vivasor Incorporated dumped another 20 million shares onto the market. Now here is the question I need you to genuinely sit with for a moment. If the stock is heading to $3, why are the people with the most inside knowledge selling aggressively at 40 cents? Why would you sell at 40 cents something you know is going to 700% higher? That is the uncomfortable contradiction at the core of this entire trade, and it is almost certainly connected to the legal storm that is now surrounding this company. Major law firms, including Johnson Fistel, Pomerantz, and Robbins, are actively investigating Datavault AI for potential securities fraud. All of this stems from a bombshell short seller report published in October of 2025 by Wolfpack Research, which alleged that Datavault AI is nothing more than a stock promotion scheme built on empty Web 3.0 buzzwords and deliberately misleading press releases. These are not anonymous internet accusations. These are licensed attorneys building formal legal cases. You must price that risk into every single share you buy. So, with all of that context on the table, the bullish technicals, the explosive growth metrics, the toxic insider dumping, and the active legal probes, let us talk about the one metric that could single-handedly detonate this stock to the upside regardless of the fundamentals. The short interest. Datavault AI currently has a short interest sitting at 17.47% of float. That means over 93.7 million shares have been borrowed and sold short by bears who are betting this company fails completely. The days to cover ratio is 3.65 days, meaning that if positive news forces those short sellers to start panic buying to close their positions, it would take them nearly 4 full trading days of average volume just to unwind. On top of that, off-exchange dark pool short volume is running between 51 and 71% of total daily volume. And borrow fees, the cost short sellers pay just to hold their negative bets overnight, are running between 10 and 12.5% annually. That is an expensive bet to maintain. Combine a trapped short base, a high borrow cost, thin float dynamics, and an imminent exchange listing that could generate an unexpected surge in retail volume, and you have the ingredients for a short squeeze that could happen so fast most retail traders would not even have time to react. Could we see a move so violent it leaves everyone speechless? The structural setup absolutely supports it. Now let us get precise about the exact levels you need to have mapped out for the week of June 22nd. On the downside, the macro support floor is at 31 cents, but your stop loss, the level where you admit the technical setup has failed and you get out without emotion, is 35 cents. If price closes below 35 cents on high volume, the setup is invalidated. Period. Full stop. Do not argue with the market. On the upside, primary support from the classic S3 pivot is established at 39.2 cents. The ideal accumulation zone if we see early week consolidation is between 39 and 39.5 cents. The first resistance hurdle is the double top we printed at 42 cents this week. If the short squeeze triggers and we push through that level on volume, the next major target is the cluster of 50 and 200-day moving averages, sitting between 46.5 and 47 cents. That is your first major profit-taking zone. And if momentum goes fully parabolic and every bear in this trade gets squeezed simultaneously, the ultimate macro resistance ceiling sits at 54 cents. That is your moonshot target. Here is your exact 3-step playbook for executing this trade. Step 1. Your primary entry is a limit order placed between 39 and 39.5 cents during any early week consolidation dip. If that dip does not materialize and the price breaks above 42 cents on strong volume, that confirmed breakout is your secondary momentum entry signal. Do not chase below that condition. Discipline is everything here. Step 2. Your risk management is non-negotiable. If price breaks below 35 cents on elevated volume, you exit. Every cent it falls below that level is confirmation the setup has broken down, and staying in becomes gambling rather than trading. Step 3. Your profit-taking ladder. As price approaches the 46 to 47 cent moving average cluster, begin scaling out of your position. Lock in real, tangible profits. Keep a small runner position, no more than 20% of your original stake, to capture a potential move toward the 54-cent macro target. Never let a winning trade turn into a loss because you got greedy chasing the absolute top. And now, my final, completely unvarnished verdict on Datavault AI. This is a highly leveraged speculative play operating within a defined range of 31 cents on the downside and 54 cents on the upside in the near term. The heavy insider dumping and active legal investigations mean this is strictly a small, defined risk position for money you can afford to lose entirely. Not your rent, not your emergency fund, not your retirement savings. A calculated, sized bet. But the asymmetric reward potential is absolutely real. The compressed technicals, the massive trapped short interest, and the imminent global exchange listing create a genuine short squeeze setup that could generate explosive returns in a very short window. Long term, the entire investment thesis lives and dies on one thing: officially closing that multi-billion-dollar financing deal and converting that $800 million contract backlog into audited, verified revenue. Watch the SEC 8K filings obsessively. If you see that deal close in definitive form, the picture changes dramatically. Before I wrap up, I have to give you the required financial disclaimer because protecting you is always the priority here at Smart Stock Sam. Nothing in this video constitutes financial advice, investment advice, or a recommendation to buy or sell any security. Datavault AI is an extremely high-risk, speculative penny stock that could go to zero. All data referenced in this analysis reflects publicly available information as of the recording date. I am not a licensed financial advisor. Always do your own research. Consult a qualified financial professional before making any investment decisions, and never invest more than you can afford to lose completely. The SEC is not your safety net on trades like this, your own discipline is. All right, Smart Stock Sam family, here is where I need to hear from you. Drop your answer in the comments right now. Given everything we just covered, the patent approvals, the legal probes, the institutional war, and that short squeeze setup, do you think the June 23rd exchange listing is the catalyst that finally breaks Datavault AI above 42 cents and triggers the squeeze? Or do you think the insider dumping ultimately kills the momentum before it can build? I genuinely want to read every single one of your takes, so do not be shy. And if this breakdown gave you even one edge you did not have before you clicked play, please do me a favor and smash that like button right now. It takes 2 seconds, and it helps this channel reach more investors who need this kind of unbiased, data-driven analysis. Hit subscribe and turn on the bell notification so you never miss a breakdown like this one. And if you really want to show love and keep this channel running strong and independent, consider sending a super thanks using YouTube's support feature. Every single one genuinely means the world and goes directly into making this content better for you. And finally, if you are serious about leveling up your trading and investing game, I have just launched the Smart Stock Sam exclusive membership community. Inside, you get early access to my trade setups, priority reply to your queries, and a community of serious investors all working together to find the next big opportunity before the crowd does. The link to join is right below this video. Come in, introduce yourself, and let us build real wealth together. This is Smart Stock Sam, and I will see you in the next one.